The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Lewis from the offices of Duke & Duke on 100 South Broad Street, Philadelphia, Pennsylvania, where you can't even get a place to park, folks, from Temple University on the north side of Philly all the way to the south side. It's nothing but parade last night and today. My little grandson, 6 years old, my wife is in Philadelphia taking care of him, and she really thought he was going to have a heart attack. And I told her, I said, welcome to sports. And Philadelphia, of course, is a great sports city. But my hat's off to Nick Foles. He went to the same high school that my daughters went to there in Southern California, out there in Westlake Village. And he is attended University of Arizona. And I've said several times on this show before, he is a stand-up super guy. While he was here, he would go to the hospitals with his wife, who's also his high school sweetheart. And they would work with the cancer kids. They work with just everybody in the community. He's just a really, really nice young man, and I'm happy for him. Let's move on to the markets. As we can see here by the DAX chart, we've had a little bit of a sell-off, and it's starting to continue this morning. But frankly, folks, I think we've got a chance for some type of a bottom forming in here. And let me just bring up this chart. This is the chart from the newsletter. I wanted to give you a little heads up on this. I might be wrong here, but we'll take it. We'll take a look at this. You'll notice that the VIX index right here from Friday, the target on this was at 1927. That's been the high so far, and we're trading at 18 and change. So there's a possibility we could be looking at a little bit of a bounce here in the market. I'm not sure if it's going to happen yet, but it looks like it's got that kind of a chance. So whether we get it or not, remains to be seen. But it's got that possibility in there because the VIX does have some good technical indicators that, determine where the market's going. But believe me, longer term, it looks pretty ominous. The next one we want to take a look at, of course, here is the FTSE. This has been a really big one. As you remember, we had that big ABCD up there around the 7,800 level. We're now at 73 and change, and it's got a hold right here. As you can see here, we have a potential here for a 135 pattern in the FTSE. So that's another reason saying that we might get a little bit of a break. But frankly, the move down was so quick and caught so many people by surprise, except for two people, boys and girls. Our good friend Norm Winsky was on, if you remember, on the 29th, and he talked about a potential for a really strong market reaction here because of the fact that we had this lunar eclipse and full moon, and he was certainly right. And we also had Stan Harley on, and he had his chart, and I'll put this up to remind you folks of what he was talking about. But it was the number of trading days in the cycle. It was a 27.5-day cycle. And let's get this up here so everybody can see it. You'll notice that that is exactly what happened. Now, that 27.5-day cycle, folks, it's basically the lunar cycle because, you're looking at 27.5 days from full moon or from new moon to new moon. So, that's what we're keeping an eye on here this morning. But there's a little bit of support down here, but frankly, it's very minor. When we broke 1821 in the S&P, that was the real sign that there was trouble in River City, and that's what we have going on. For the thing that's what we got. Okay, yes, Dale Pinkert was on our guest. He's hunting for stops, and he's a really nice fellow. I've known him for a very long time. He did a great job also on the currencies, and we'll cover the currencies in the second half of the show here. But right now, we just want to focus on, the original stock market thing. There was only one pattern in the stock market that that said that we were having some type of a top, folks. And this is the one that we featured in last week's letter when we had that big 1.618 expansion, multiple ABCDs up there at that 160 level. And we're down to the 152 level, so we're almost at the 61% retracement off the low in November in the Russell. So that there's another reason that it ought to give some kind of support. And remember, the shorts are absolutely scared to death because of what's happened. We were up 17 of the 21 days in 16 of the 21 days. If it hadn't been for the last week, we would have had almost up every day for the month. But they are a little scared. So when you see these markets rally, they're going to rally a lot, and that's why you're going to see this volatility spiking. I think that's one of the things that's going to be the characteristic of this market for the rest of the year, is the fact that volatility is back, and we're going to see some pretty wild swings on some of these things. That's what it looks like. Anyway, we'll take a look at it now. I realize that people are talking about the fact that the interest rates is what causing this. Folks, the interest rates have been going down for several years. They told everybody this past week when we broke below, or when the 10-year note spiked above the 260 level. Now we're above 280. I think it's going to go to 4, maybe even higher, back to the old areas where we used to have. But we'll have to just wait and see if this is going to if this will happen long term. It's very oversold, but frankly, just look for a really good ABC to sell those bonds and notes, because this is a really bear market in the making, folks. Higher interest rates are here to stay. And if you're interested in refinancing your house, now's the time to do it, because it's not going to get any cheaper. That's basically what we'd be looking at for when we watch some of these things. Anyway, we will. We'll get back to well, let's do a little bit about the gold market right now. We made that big Gartley pattern up there at that 1352 level. We talked about that on the show here last week. We broke $20. We got down to 1332. We're trading around 1340 and change right now. So there's a possibility that we're in a consolidation area. But there's one chart that we really need to look at, and that is the relationship of the gold to the euro. If you remember this is one of the things that we were talking about last week, is the fact that there was a highly suspect move here in gold, because you'll notice that the price in dollars, looked like it was breaking out, but the price in euros, it was certainly not doing that. It was making a 135 pattern. And when you look at the fact that silver, couldn't even make, just barely made the 78% level, that was another, big red flag. So that's why we were changing our tune from bullish to bearish in the gold. And it seemed to, at least it's working out right now. But if we get above that 1365 level, that'll tell us that we're probably going to go a lot higher. In fact, above 1352 now would tell us that we're looking at something, pretty dramatic. So we'll be right back. 877-927-6648.
The TAZ Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAZ Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAZ Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAZ Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, from the streets of Philadelphia, we have Mr. Z and Go Eagles. John, how are you this morning?
Good morning, Larry. Thanks for taking the call. Yes, Philadelphians are quite enthusiastic this morning.
That's probably the understatement of the year, isn't it?
Well, speaking of understatements, it is a challenge here Sunday and Monday. Not only do the Eagles, the Philadelphia Eagles, win their first Super Bowl in 52 years of the events, the same time frame gives us the greatest velocity of price change in stock index futures in 2 years' time. So the challenge to navigate both of those simultaneously, it's a challenge, I confess.
It's not easy, as they say in the trade. What can I do for you, my friend?
Larry, I'm asking a question as a student of yours since 2007. On the E-mini S&Ps, the S&P index, the trade shorting the S&P up near 2870 was an obvious low-risk pattern recognition trade, given that monthly chart ABCD pattern stopping precisely at the 2870 mark, which is the ABCD to the point. I mean, it's precision. I must confess, I find it remarkable. I don't understand why that happens, but it is what it is.
Neither do I.
So that was a low risk trade. My question is, Larry, I'm assuming you had shorted the E-minis somewhere in that area, just on a pattern recognition trade entry. My question is, it would be very helpful for me, given this dramatic move, if you could share where you sought to cover or where you will cover and why. I always get challenged when things start moving, a lot in a short period of time in keeping my head. So if you could answer that question, I'd be much obliged.
John, regarding the E-mini S&P, I could see there was a big ABCD there, but the pattern that was the clearest to me was in the Russell 2000 IWM. That was the one that, in fact, as I posted it this morning, I will post it again because it looks that interesting. And that is, it was the only one that really gave us an indication that it was at some type of a major high, because we had the real clear ABCD, the butterfly patterns. But let's just move on. We've had a big move. Now you'll notice here on this Russell, we've got a 61% retracement from the November low coming in around the 150 and change level. We're close to that right now. And the other thing that we wanted to talk about, of course, we'll get to that E-mini. We'll bring this up to take a look at. I just wanted to show you that last night we broke below the 61% retracement of the January low. We got all the way down to 2730. Now what I'm expecting now, and this is, believe me, I don't know whether I'm going to be right or not, but because that VIX index got up to the exact price last night at 1937 where the big ABCD was, I'm assuming that we're probably going to get some type of a bounce here. I don't think it's, well, look, these bounces could be 600-700 points now, because we're in volatility areas that we haven't seen for quite some time, and so we have to be able to factor that in. Back to your question, John, the only way that I can meander through these markets is to move down to a 15 or 30-minute chart to try to see the patterns a little clearer. I believe that there's a possibility that the high for the year is in, but we don't know that. We won't know that for probably a month or more. But the only thing that I can do is go down to a 15 or 30-minute chart to quantify the risk to see whether I can enter a trade, because these swings that we're going to see from here on in are going to be dramatic. If you remember about 2 or 3 weeks ago, we had a 350-point move in the Dow, and that was on the downside and went right back and made new highs. But that was saying that the next move was going to be 1.618 of that. Well, it ended up being, about 1.9. So, the swings we're going to see, we'll see 1,000 points in the Dow in one day, either up or down, maybe both, sometime this year without any trouble at all. We'll see 1,000 points. That's going to be a no-brainer. And the only reason I'm saying that is the biggest move so far has been 650, around 700 points. You multiply 700 points times 1.618, that gets you to 1,100 points. So we're going to see one of those without any trouble at all. And it could do both sides, up and down.
Okay, let me put you on the spot. Having shorted the E-minis, where's the cover?
Well, John, you want to cover on the low on February the 15th at 9:20 in the morning, and I'm not sure what the price will be, but that's I don't know. I just watch the patterns and the ratios. That's really all I'm looking at. But no one else knows either. But we'll wait and see if it unfolds like we think it's going to. But we had this big move down. We had the gap. Remember, we still have 9 gaps to fill in the Dow Jones Industrial Average, and some of them are down around the 22,000 level. So, we could see a huge correction in this thing, and it could still be bullish. You just don't really know.
Yeah, that's exactly right. Thanks so much for that discussion, Larry. Just in passing, to wrap up my conversation with you, I just wanted to share with you just an observation on the silver market. Silver, of course, has been lagging the gold rally. That's certain. What I observe, however, is that the rally from December to January, 1565 up to 77, has been corrected quite significantly. That flush that occurred on Friday down and into Sunday night at 1651.52, that's pulled back a good amount, more than 50% of the preceding rally. For me, assuming this is a bull market, and that's an assumption, and that's not proof yet, I understand that, but that flush is, for me, sets up a terrific long downside re-entry. So just wanted to share that observation with you.
I can certainly agree with that. And, the fact that gold is held above the 1330 level after 3 attempts has been pretty good. The fact that it's not really exploding to the upside is a little question mark. But you're right. If we can get silver back above the 1740 level one more time, this thing could have, pretty substantial legs. I don't think there's any question about that.
Thanks for the IWM and E-mini discussion, Larry. I do appreciate that, sir.
You bet, John, and thanks for calling in. We always enjoy talking to you. You do some great work there in the Tiger Den, and everybody appreciates it. So just stay away from the Broad Street today because it's going to be pretty wild out there, I think.
Well, we'll call in from the parade in a couple of days.
All right, thanks a lot, John. Mr. Z from Philly. We'll be right back, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I've posted the chart of the Bitcoin. You can see this big ABCD pattern that we've been looking at. We hit this level of 7,800 on Friday. You'll notice that the volume The volume spikes that are there were huge. That, in fact, this last volume spike was 429% of the 50-day bar average. And this is we get from our good friend John Jameson of the Jameson Letter. And if you'll notice really closely, folks, on the far right-hand side, right after point D, we completed an ABCD pattern. The market actually rallied $2,000. It's hard to say these words. $2,000 a share. And then has reversed and went back down again. Folks, that is a really bearish formation now in Bitcoin. The fact that we had that nice bottom form, very good volume, perfect ABCD. We had a beautiful butterfly pattern over the past 2 weeks. Everything was set up just for this thing to go screaming to the upside. It rallied $2,000, and then bada bing, bada boom, down she goes. So looks like we're going lower in Bitcoin. Now, it might hold in this area, but frankly, the odds are that we're going to probably go down to the next level. We used Kerry Szymanski's chart. If you remember, let's get this up here so we can take a quick look at it here. He was doing some, Elliott wave expansion things, and you'll notice that his profit target was down in this area where we still are. You'll notice that red box extends from 7,600 down to 7,475. So there's a possibility we could hold that level, but it's going to have to prove itself. This is one of the reasons that when we're looking at some of these things, and I don't trade Bitcoin, I never have, but when you're watching things like we were talking about with Mr. Z, how you enter these markets is if you go down to a 15-minute or a 30-minute chart, you're going to be able to see, how you can enter these markets, without, risking a great deal, because it'll get you to the point where you don't know for sure you're going to be right until you are, but you'll know exactly what your risk is. And that's the whole key to these markets, is not how much money you're going to make, but how much money you're going to lose. Football is a great example of that, folks. The defense won the game for Philadelphia when the linebacker made Brady fumble. That was actually the game. With 2 minutes to go, you got the greatest quarterback in the history of the NFL, in the 40-yard line with 2 minutes to go. Hello, Federal. That's danger. And what happened was they fumbled, and that was the ball game. So it's the same thing in trading. You've got to protect your backside, because you don't know, you don't know whether you're going to win or lose. But the only thing you can, really control in the risk-reward equation is the risk, and that's where you've got to be able to look at it. Those of you that have been out to visit me here in Arizona, and there's quite a few of you, notice that my car, I've had these same license plates for almost 30 years now, and my license plates say no risk. And the reason why is keep your risk as small as possible, and you'll be better off than I have to tell you a funny story about that no-risk license plate. My good buddy Jimmy Elder from Birmingham, Dr. Jim and I had just picked up the car, and I had the new license plates put on, and we were going down to the Air Museum, and we had to stop and get gas. And so I was getting gas, and this little teeny bopper from the University of Arizona said, "CG, that's a really cool-looking car." She says, "What does those license plates mean?" And it said no risk. And I said, "Well, I work out at the base," and I said, "I teach the F-16 pilots how to eject." And she said, "That is such a cool job." She said, "Would you like to go out for a drink sometime?" And I almost fell over the side of the car. Jimmy was laughing so hard that he was uncontrollable. He's never let me forget that. But that's the theory of no risk. Anyway, keep your risk small. You'll be far better off. He who knows not what he risks all. That's the main thing. That's the main banner that's on my beautiful oil painting here in the office in Tucson, because keep your risk small and you'll be far better off. You can kiss a lot of frogs before you find a princess, folks, but you've got to be able to stay in the game, and that's what you don't want to do. Don't ever go for broke. You just might succeed. So just keep that in mind. Okay, getting away from Bitcoin, let's talk about this U.S. dollar index, folks. We're really trying to hold this level. Let's put this up here on the weekly basis. This is a really critical, this 88 level in the U.S. dollar index. It is, we get below that, Katie bar the door. This means that we're going to be looking at, much higher prices in the euro and some of these others. But right now, as we mentioned last week, it had a lot of things telling you that it was really ready to, hold. And that's what the dollar index has been doing. A perfect example of that has been the dollar yen. If we take a look at that like we did on Friday, we hit that multiple 61% retracement level since, in April, September, and again in February. So it held that 107 and change level. We've now rallied 3 handles up from that level. So that's telling you that bottom's in. But if we turn around and reverse below that, wow, you're looking at some pretty big moves in some of these things. The euro is the interesting one also, because if we look at the euro on the daily chart, let's just get this up here so we can see it. Let's change that. Let's look at the weekly here, because we'll get it up here to see it a little easier. If you look at the euro here on the long-term weekly, we made the 1.618 expansion from the 2015 high. And that tells us that might be up. Now, you notice that just above that 1.618 expansion is the 61% retracement. It missed that by about 60 pips. To me, that's too much to miss in the euros, in foreign exchange, because these things hit these numbers just absolutely, spot on. So I cannot say that is a valid number up there at the 61% retracement. The 1.618 expansion from the 2015 high to the 2016 bottom was certainly a 1.618, but it did not make the 61% retracement. The British pound, however, if we take a look at it on the daily, and we're trading in the 140 zone right now, we've already broken over 300 pips. You'll notice that the British pound went right up to the 78% level and is now broken down. And there should be, if you'll notice this chart, watch it closely, because if the British pound gets back to that 138 level, that's going to be a really strong place to look at it for having support. And the reason I say that, it would equal the same moves that we've had down in the last swing. So, and you'll be right near those old highs, and you'll be right at the old Fibonacci number of 61%. And these markets have a tendency to go back and look at these numbers one more time. And I don't know the answer why they do that, but I guess it's related to synchronicity or harmonicity or something like that. But I would certainly keep a close eye on it. It looks really interesting. All of them, in fact, look very interesting. Another one that is really okay, hold on one second here. I've got to answer a question here. Is the Canadian dollar. We had a really big move here in the Canadian dollar here on Friday, coming right off of a perfect 3-drive pattern. You'll see it down there. Actually, excuse me, folks, that's a butterfly pattern down there at the 78% level at 122.50. And we've rallied over 200 pips in just a matter of one day. So we'll see what happens here. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and I wanted to mention something. My good friend Jim Bartleone, who was an old F-16 pilot, well, he's not old, he's only 48, but I have that whole squadron. I had 4 F-16 pilots as students over. They were all in the same group, and they had these cool names like Bart, Rooster, Bucky, and things like that. But the thing that's really good is that Jim has really taken the study of esoteric things in the market to heart, and has done a incredible 50-minute video describing how the Fibonacci ratios in the markets work in harmony with music and vibration. I mean, it is really, really something spectacular. I'm trying to prepare it so that we can share it with our folks here at TFNN, because if you've ever had any doubt of how these numbers work or where they come from, this video would really, the presentation would really be something to look at, because it makes the relationship of how these things move very, very important. But we'll try to get this done here in the next couple of weeks so that you folks can, take a look at it and see how some of these things are, acting. So the markets are opening now. We're still probing for a bottom down there. I think that bottom's going to hold. That's my 2 cents worth. But remember, that's 2 cents, and it's COD here, so you don't have to worry about payment or anything. But kind of keep an eye on it, because that volatility index made that big ABCD pattern. And believe me, the market is still bullish long term, folks. This is just the big sell-off that people are looking at. Whether they blame it on interest rates or whatever it happens to be doesn't make a whole lot of difference. These markets have been extremely, extremely bullish. You have to respect that bullishness. And when the rally does come, the people are going to be bargaining, and I don't know where it comes from. I really don't know the answer to that, but they will be bargain hunting, and you'll be able to see it, with the exception of stocks like General Electric. General Electric stock is really in big trouble, folks. It's been in trouble for many years. Even when Jack Walsh was there, he was received as the greatest CEO of all time. And folks, I really challenge that, because if you followed the history of General Electric, one of their most profitable units was their capitalization unit, where they would extend capital to people. And the guy running that was a young man named, I can't remember his last name. His first name was Don, and he was on Bloomberg several times, and I listened to him speak, and oh my gosh, he was so in tune to what was happening and how he priced things and stuff. And what happened was they wanted to cut his salary. He was the most profitable unit in General Electric, but he was making too much money, and so they wanted to cut his salary. So he did the only thing he could do, and that is he quit and went out on his own. And what did he do? The people that we were working with at General Electric, what did they do? Well, of course, they followed somebody who was a winner. So that was the first thing. And then when you started to see other things, the decisions that they made, what they'll probably end up doing, because the stock is ready to break 16 and pretty close, means they'll probably have to sell off units in order to salvage it. So we'll see just a small fraction of General Electric, which is sad, because it is the last living and oldest member of the Dow Jones Industrial Average back in 1896. So this is going to be a sad day, but no, it'll pass like everything else. No one really cares. But that's what it's looking like in General Electric. Once it broke 19, boy, that really told you that it was going to have a pretty substantial move to the downside. So just sort of remember that all these things are not always here to stay. If you remember Polaroid, Eastman, Kodak, I mean, a lot of different companies that have been in there have now disappeared because technology changes. Someday maybe even Facebook. Well, it could never happen to Apple or Amazon. That would be hard to believe, wouldn't it? But anyway, we'll see what happens to these things a little bit longer term. But right now, General Electric is under a great deal of pressure. There's no ifs, ands, or buts about that. So let's just take a quick look here about these gaps that we have in the Dow Jones. And I wanted to bring this up here because I was expecting to see another. We've broken below the. Fact is, we're right at the. C25. We've already broken below. Well, in fact, we hit almost the exact 382 retracement overnight. That would have been down about 250. We're down about 300. So far, we've held that 382 retracement in the Dow, folks. But look at all those gaps. We got a gap at 20,000. These are really big gaps. And we've got others, 21,000, 22,000. 23,000. We've got gaps all the way down here. They will be filled, but whether they'll be filled quickly or later, we don't know. But these gaps will be filled. That's the whole theory of why the Dow theory actually works. So watch that. And right now, the negativity is in the market. Mainly, they're saying it's due to increased interest rates. Frankly, I don't think that is going to be the case at all. I think it's going down because it's supposed to go down. We're up we had a monumental move, folks, from I don't know, thousands of 4,000 Dow points. Actually, since the election, I think it's been 6,000 Dow points. So, it's due to have a correction. And seeing the Dow down 1,000 is no big deal anymore, folks. It's not when the Dow's down 1,000 when it's trading at 8,000. That's a big deal. But when it's trading at 25,000, that's not a big deal. So it's a percentage of what is moving on. Now, Basil Chapman is talking about how Chopin used Fibonacci numbers. And another one, I don't know if you've ever looked at this. I don't know much about music because once you get past Nashville, it's beyond my pay grade. But Mozart was really big into that. If you've ever been to his house there in Strasbourg, Austria, you'll notice his home has beautiful pictures of the spiral mirabilis that's related to music. And, of course, he was composing when he was 4 years old. So he was another savant. But this all related to music, and hopefully we'll get Jim Bartleone to segregate this out so that we can put it into a format that you folks would be able to understand. You would really enjoy it, folks. I mean, he walks you through the notes of music and how it relates to the market. It's really a cool thing, and how it relates to the human body and the universe. All of it is just really really spectacular. I mean, I taught him how to do ABCD. He did most of the other stuff by himself, but he's a really smart guy and a very, very astute trader, Sue. Yeah. Oh, Terry, bad. Just a minute. Bad one, Terry, bad one. Terry just posted in here that Mozart is no longer composing. He is decomposing. I think Rodney Dangerfield would actually test you on that one, my friend. Okay, let's move on here to the next one here. We only got a couple of minutes left in the show. Watch these gaps in the Dow Jones, folks. Those are the ones that are going to be interesting. The next one comes in at 23,000. That's a couple thousand points from where we are right now. But we need to find out whether the market is going to hold this level and what the rally is going to be. And the only way you find that out is if you look for an ABCD pattern coming in. You know, the dollar's continuing to strengthen. We got the euro down at 24.06. The British pound is now ready to break the 140 level. That's more than 300 pips off the high at 78% level. Gold's trading at 1337 after just making a small ABCD pattern. So many of these things are getting ready to have some pretty good moves today. So if we pay attention, we'll take a look. 877-927-6648.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. Last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I wanted to mention one thing. Every year in late January, early February, we have a 2-week wholesale jewelry show here in Tucson. It's the largest in the world. There's about 30,000 dealers come from all over the world to, do their buying and stuff for the hotels and jewelry shops all over the world. And one of the dealers happens to be a good friend of mine. He's been staying with us for 23 years now. And he told me that yesterday when the show finally completed, that his business was down more than 40%. He said it's the first time he's seen a drop in his business in all these years. He didn't know what it was caused by. He thought possibly Amazon, but he said the people were really complaining that it wasn't just him. There were others, because this is huge. I mean, you can't believe how big this thing is. You can't even rent a car or get to a restaurant. Usually it's so crowded, but evidently the business was way down this year. So he was a little concerned about that. Whether that has anything to do with the markets or not, I don't know, but I just thought I'd bring that to your attention. I know Amazon's hurt a whole lot of people with their business practices, but there's really not much else that you can do to talk about it other than that, because it's their business and they've done a great business plan for this. Remember, folks, we've got some really strong gaps there in the Dow, way down there. The next big one's around 23,800 in the Dow Jones. Take a look at that. One other one that looks real interesting for a potential to hold is the transportation index, down about another 150, because we would have you don't have to be sorry, Terry. It was rather funny. And I don't think Mr. Mozart would be worried about it to see what's going on. But anyway, take a look at this transports chart. We've got that 20-man line coming in there right at the 61% retracement. You'll see down around 10,500. So watch that, because like I mentioned with this VIX index making the ABCD pattern, there's a possibility of a rally. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.